We're a human capital firm, and we go up and down with the economy. So if the economy runs into problems because of political uncertainty or because of political instability, we will be affected by that. But we won't be affected, I don't think, out of proportion to anybody else. Some of the businesses we're in, like insurance or things like that, are actually businesses that there will be new demands created by additional instability. And one of the things we have is analytics and actuaries that can help people deal with that instability, that can help devise new products, that can help devise new ways of dealing with risk. I think that employees will indeed be looking for new ways to deal with risk. One of the most interesting things that I observed after the financial crisis was the changing employee attitude towards risk. So we have been doing surveys of how employees feel about defined benefit plans versus defined contribution plans for 30, 40 years now. And one of the things we found is that when employees are young, they always like the defined contribution plans, and when they're older, they like the defined benefit plans. After the financial crisis, we saw a big shift to where it used to be that the age that there was a change was about 45. We saw that shift down to about age 28 or 30, somewhere in around there. And I thought that that was just an artifact of the financial crisis and it would change after a year or two. Actually, that attitude towards risk has persisted in surveys we've done. We see a similar thing with employees' attitude towards healthcare and the provision of healthcare and how important that is. And I wonder if we're maybe seeing a fundamental shift in thinking about risk of benefits and risk around your job, understanding how millennials think about their whole world, about business, about the jobs, about what their role is in society, is a very interesting proposition. I tend to believe that in general, people today aren't that different than people were 30 or 40 years ago. And I think on most instances that's really correct. On the other hand, people grow up with different experiences. And I think millennials have grown up in a world where there has been a lot about them. There's been a lot about protecting them from risk. And I think we see some of their demands for certainty, some of their demands to be protected from risk are consequences of the way they've grown up. What we notice is when we're out talking to clients, if they want to hire us for a project, they also want to know that we have products that we can deliver. So if we're doing something in performance management and consulting on that, they want to know, do we have a performance management product that we can implement for them? Over the next 5 years or so, we're going to be focusing a lot more on developing products and solutions, and it's going to become a much bigger part of the company. From maybe about 10% to 15% now, we expect it to double the percentage of where we are. So we're going to have a much bigger emphasis on that. One of the things that is a consequence of that is that we need to broaden somewhat our market. We have tended to be focused in just the large companies, but of course, if you're going to sell products, there's a lot more medium-sized companies than there are large ones, so you want to be in that. So we're going to be focusing on developing a direct distribution network in the middle market. What makes integrations work in big M&A activity? I would say there's a few things. One is, I think you need to have a good plan as to what you want to accomplish. And that starts with a relatively simple idea of what you're trying to accomplish with the M&A activity to begin with. And you want to have that out in front of you, and you don't want to lose sight that that's what you're working towards the whole time. I think you need realistic planning. You need to understand what you can do well and what you can't. You need to understand where you need to get advisors and where you need to do it yourself. The senior executives in the organization need to own the M&A integration. And so I think that's a fundamentally important thing. I would say the three most important things are communication, communication, and communication. No matter how much you tell people about what you're doing, I think there's always a thirst for more. And in fact, there are voids created if you don't get out there and communicate, and people will fill in those voids with their own information. So it's important to get out there and do that. And then finally, I would say the other thing is the greatest enemy of M&A integration is timidity. You need to be bold. When you're putting together two organizations and you're trying to create something which is different, you have to be prepared to take the steps to make something different. And that causes some angst to people. But the consequence of not doing that is worse than being prepared to take action. I think value creating is something that I would clearly want to see there. I think innovative, because where we are moving today, where we're moving for the future is one where we need to be a step ahead of our clients in thinking about their challenges and being prepared for it, and understanding what their challenges are going to be even before they come up with them, and then having the solutions ready. And then finally, global. I think we are already a global company, but we're going to be a much more of a global company in the future.